Okay, guys, let's do the note number 8 for this particular question. So we are given the pre-adjustment trial balance on the what? The 29th of February 2012. So this tells us our financial year ended on the 29th of February 2012. Then it started, or rather it started on the 1st of March 2011, right? Okay, so for us to be able to do our note number 8, which is our current account, we need salary, bonus, and interest, and all of that, right? So let's start with the salaries, right? So for us to know how much is each partner getting, we need to read the additional information. So according to this additional information, the partners, they receive a monthly salary. Ash received her full salary of what? Of 49,200. So since this is a full salary, 12 months, like I told you, you are going to write it where? You are going to write it here, right? To say Ash received her full 12-month salary of 49,200, right? And then let's look at Trish, right? So for Trish, what does it say? It says Trish received 67,250. This included her salary for March 2012. Salaries were increased by 15% on the 1st of January 2012, right? So what does this tell us? This tells us that our expense salary has been what? Has been prepaid, or rather, we have prepaid our expense, right? Why am I saying that? It's because our financial year ended when? On the 29th of February 2012. But we also paid Trish what? Her salary for March. This March belongs in the next financial year, right? So therefore, this salary of 1 month, Trish, it is a prepaid what? A prepaid expense, right? Remember, according to the matching principle, we are supposed to only include expenses and incomes for the 12-month period that we are in, right? Not for the next financial period, right? So since this is for the next financial period, we need to remove this what? This salary from this full salary, right? What we can just do, we can just do what? Divide the 67,250 by 13, right? We cannot just divide it by 13. Why? Because it further says salaries were increased by 15% on the 1st of January 2012, right? So therefore, this is where we need to draw our what? Our timeline. Okay, so let's draw our timeline. Here's our timeline from the 1st of March 2011, when our financial period started, up until March, right? Not February, but March, because because March is the what? Is the month in which we paid what? This particular salary as well, right? So we paid this salary for a full 12 months, and then we also included March. So hence I drew the timetable that includes what? 13 months, right? Okay, so they told us, right, that this increase happened from when? From the 1st of January, right? So here is our January, right? So this increase started from January, right? So therefore, even March as well includes this increase, right, of 15%. And I told you that you have to add it with what? With 100, right? So that it can give you 115, right? So if your increase was 10%, you are going to add it with the 100 to give you 110, right? And then the rest of the months, right, we're operating at what? At 100%, right? At what? At 100%. Okay? Therefore, we put that in writing. We say our rent was at 100% for how many months? For 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For 10 months, right? Our rent was at 115 for how many months? For January, February again. So January and February are within our financial period, except for March. But since March is paid, we need to include it. So it's January, February, and March. You include March is 3 months, right? So this has to give you 13 because salary for Trish was paid for 13 months, right? And then 100 times 10, it's 1,000. And then 115 times 3 is 345, right? So we add it together, we get 1,345, right? So how much in total did we pay Trish? We paid her 67,250, right? So we need to get her how much is she paying for each month, because we cannot just divide by 13, right? So therefore we need to use now this route. So she got 67,250. Okay, so for us to be able to deduct for March, right, we are going to take this 345. So you'll say 345 divide by what? By the total, which is 1,345. This will give us how much? This will give us, this calculator, I don't know it. So this will give us how much? This should give us 67,250. I multiply 345. I divide by 1,345. That will give me 17,250. That this 17,350 is for 3 months again, because I took this 345 again. So I divide by 3, and then this will give me 5,750, right? So therefore this is the amount that we should deduct from the 67. So 67,250 minus 5,750, this will give you what? This should give you the salary of Trish for the entire financial year of 12 months is what? 61,500. So here it is, I wrote it there, right? Let's get to the interest on capital, right? So in terms of the interest on capital, if you can remember well, we calculated what? We did our note number 7. Okay, so here is our note number 7, right? Here's our note number 7, right? Okay, so our note number 7 is telling us that for Ash, she had what? She had 110 at the beginning of the year, right? And then at the end of the year, she had 180,000, right? So since she had 180,000, we are going to calculate what? Our interest on capital, right? So let us look at the percentage. So we are being told here that our interest on capital is 7% per annum, right? So we are supposed to calculate the interest on capital at 7%, right? So therefore you need to know what is the balance. Let's start with Ash. So since Ash has different balances at the beginning and at the end, right? So you need to do what? You need to calculate the what? His interest on capital for the balance at the beginning and his interest on capital for the balance at the end, right? So you say what? Balance at the beginning, also balance at the end, right? Also remember that his capital was not the same throughout the year. Hence you need to do what? You need to calculate his what? His interest on capital for at the beginning and at the end. So at the beginning is 110. Right, 1,000, and then at the end is 180, right? So we multiply by 12%, we multiply by 12%, right? So and then we multiply by what? By the time over 12. How long was his capital 110, and how long was his capital 180, right? Over 12. So how long was it? If we could look at the timeline again, right? This person increased his capital, Ash, right? Ash increased her capital when? On the 1st of September, right? So meaning from the beginning of the financial year up until what? September, right? Her balance was what? Was 110. So it was for how many months? 1, 2, 3, 4, 5, 6 months, right? So therefore it was for 6 months. So therefore when you calculate for the first one, you say it's 6 months, right? And for the next one, right, from September up until the end of the financial year, it's also another 6 months, right? Because when he changed his capital, right, by increasing it with 70,000 on the 1st of September, he made it what? 180,000. Right? So meaning he had this 180,000 from the 1st of September up until February. So that's 1, 2, 3, 4, 5, 6 months, right? So therefore it's what? Is 6 over 12, right? So this will give you 6,600, and then this will give you 10,800 when you punch it in your calculator, and the total will be 17,400, right? So this 17,400, this interest on capital, right? You're going to take it where? To your note number 8, right? So here is my 17,400. Okay, and then for Trish now. Okay, so when it comes to Trish, right? Trish, I'll just use the balance at the beginning only. Why? Because his balance was the same at the beginning and also at the end, right? So therefore, what will I say? I'll say balance at the beginning is equals to what? He had 150,000 at the beginning and at the end anyway. Then I multiply it by 12%. Then I multiply it by 12 over 12. It's 12 months because his capital was 12 months for the whole financial year, right? So therefore, this will give me what? If you punch this in your calculator, this will give you 18,000, right? Then I will put my 18,000 where? Here, right? Okay, so remember, for you to get the total, you add your salaries, right? And then there was no bonus in this question, right? And then for your interest on capital, you add your interest on capital that we calculated for you to get the total. Now, the primary distribution of profit, I told you it's your what? Your salary plus bonus plus capital again. So when we do that, we are going to get what? Okay, so after so now for you to get your primary distribution of profit, like I said, you add these two numbers, right? Yes, right? You add your salary plus bonus plus interest on capital to get your primary distribution of profit. And when I added these two numbers, I got 66,600, right? And then also for these two, since we do not have a bonus, this will give you 79,500, right? And then same as this one, you add these two numbers to get your total, right? And then for your final distribution of profit, right? Like I told you, right? For you to say to get your final distribution of profit, you will use this formula to say my final distribution of profit is equal to what? Net profit minus primary, total what? Total primary distribution of what? Of profit. Right, so our net profit, according to the question, is how much? Our net profit was given as 190,000, right? So this is our net profit. Then we deduct what? The total of our primary distribution of profit. So the total of our primary distribution of profit is 146,100 again. So when you minus it, you get what? 43,900. Right, so meaning your net profit minus the total of your primary distribution of profit, this will give you 43,900, right? And then now this 43,900, like I said the other time, you have to put it here, 43,900, and then you share it among what? Among your partners. For you to be able to share it, you need to use this ratio, 3:2, right? So the 3 is for Ash, and then the 2 is for Trish. Right, so when we share it, Ash, okay, so looking at the ratio again, so the 3 is for Ash, the 2 is for Trish. When you add these two numbers, it will give you a total of what? Of 5, right? And then now, so this is our total. So when we share this amount, 43,900, we say multiply by what Ash is getting. She is getting 3 over the total, and then it will give you 26,340. So you put the 26,240, and then Trish, right? Trish, we are sharing the same amount, 43,900, right? We multiply it by what? By 2, because she is getting 2 again over the total of 5. Therefore, she's getting what? 17,560, right? So we write it here, 17,560. When you add these two numbers, it needs to give you the total final distribution of profit, right? Okay. And then when you add what? For you to be able to get your profit or loss as per income statement, you need to add these two, right? You need to add these two, right? Okay, so therefore, for you to get the what? The profit or loss as per income statement, you add your primary plus your final distribution of profit, right? And then this is how much I got for these two people, right? And then the total gave me a profit, right? Our net profit of 190,000. So if you can remember, our net profit was 190. So this means that we are what? We are correct, right? Then we look at drawings, right? For you to be able to get the drawings, they did not say anything on our additional information, right? They didn't say anything, but what we can do, we can just look at our trial balance. So our trial balance says the drawings was what? For Ash, it was how much for Ash? It's 43,680, and then for this one is 42,720, right? So that is the what? That is the drawings, right? So it's 43,680, 43,680. You put a bracket there to show this is going to decrease their current account, and then this is for Trish is 42,720, right? And then this is going to decrease as well, right? Okay, so therefore I need to actually, okay, so I just added the two numbers so that I can be able to get the total there of drawings, right? So therefore, okay, so after doing this, you now continue to get your retained income or loss during the year. For you to be able to get your retained income or loss for the year, you deduct what? You deduct your drawings from your profit or loss as per income statement, right? So therefore, you're going to say what? You're going to say, for Trish, it's 92,840 as her profit, right? You minus 43,680, that will give you her, she is left with 49,160. So it's 49,160. And then for Trish, her profit or loss as per income statement is 97,60, right? So it's 97,60. Then we deduct what? We deduct her what? We deduct this 42,720. We deduct the 42,720, and then we should get what? 53,340. So it's going to be 54,340, right? When you add these two numbers together, I had previously calculated it. Okay, I didn't calculate the total. So when you add these two together, I just wanted to save time there. 54 plus 54 is what? 54,340. We add it with what? With 49,160. It gave us that much, right? That's our total, 103,500. Fine. And then our balance at the beginning is the balance of what? Of our current account, right? So the balance of our current account at the beginning for Ash was 94,200 credit, right? So what does credit mean? Since our current account is a capital account, it's minus plus. So credit means this is a positive balance again of what? Of 94,200. So therefore here we're just going to add 94,000. Okay, so like I said, we had to add these two numbers again, the retained income at the beginning of the year, and then we are going to add it with what? With the balance at the beginning, so that we can get the balance at the end. And then for Trish is what? It's 54,340. We subtract, actually we cannot add, we subtract the 80,000, right? So this will give us what? 25, negative 25. So you need to put brackets here and say it's 25,660, right? And then you'll say what? You'll say the 143. Here's the 143. You cannot add because they are brackets. So it's 143,360. You minus the what? The 25,660, so that you can get the total of what? Of 100 and so that we can get the total there. Sorry, it's 117,000. Yes, 700. So yes, so yeah. So now this balance at the end of the year, this total that you have added both of their current accounts, right? The balances on their current accounts you'll take now, you'll take this balance to your balance sheet. Under what? Under equity and liabilities. So it will go to your balance sheet, right? So this is the amount that goes to balance sheet.